Well, I know there's lots of ups and downs when it comes to the trading day, but over the last few years, stocks have been resilient through it all. The S&P 500, which was coming off back-to-back years of gains of more than 20% after early volatility this year, has been trading around all-time highs. The Canadian stock market is coming off two back-to-back years of gains, and as we've mentioned, is up about 9% for 2025 itself. Alex Morris is Chief Investment Officer at FM Investments and joins us to talk a little bit more about how to think about your portfolio moving into the second half of the year. Alex, after what has already been a pretty productive couple of years for equity investors, what do you say? What's your message to investors right now?
You know, normally this is the time when we would be telling folks to ease back and look at the 60-40 portfolio, which, by the way, is still having a great year, probably one of its best in a long time. But it seems that geopolitically, we're set up for continued equity highs. And that sort of goes against much of what we were trained in PM school to do. But practically, it seems that there's a lot of momentum in the market. And for the next few months, that's going to continue to happen.
Okay, Alex, maybe you can explain that part of it, because when you say geopolitical, you know, that might make some people think about trade tensions. It might make them think about sort of, you know, the worry of war globally. What is it that you see amongst all those big themes that actually would potentially give the markets more momentum?
I think the fact that markets have been able to continue to beat what has been a relatively large headwind of geopolitical events. The United States attacks, a sovereign nation. Donald Trump, love him or hate him, seems to have been able to get the big, beautiful bill across the line in more or less record time and do sort of the opposite of what many thought he would do, which is cut spending. And indeed, spending has gone up dramatically. And markets really thrive on that sort of stability. And although some of these things independently don't seem to make sense to drive equity values up, I think the market has really just grabbed hold to the fact that there has been some stability, even though I don't know if the folks doing it know what's going to happen next. They have been highly successful at affecting policy that had taken the prior administration 2.5 years to get across the line, has been done in 6 months. Well, and I think that, if nothing else, is driving this momentum.
We did speak to a strategist to start this hour whose advice to investors was to be constructive on the U.S. equity market. I guess if I were to get a little bit more specific with you, are there any parts of the market or any kinds of stocks that stand out to you if there's potentially more upside for U.S. equities?
You know, we sort of like to split the world here. It's hard to not follow the AI theme. If you haven't had ChatGPT or one of its brethren in your life, you will soon. And if not, you're going to be left behind. And there, it's very hard to pick and choose the winners in that place. So we like a name like NVIDIA, which is just broad exposure and has certainly come off as the sort of original OG AI name. And it's a good place to go. It keeps hitting, good numbers and keeps working. On the other side of the fence, we like some defensive names, and in this case, defense itself, like Lockheed Martin, where they certainly in the 12-day war in the Middle East showed that they have a platform and a technology set that can meaningfully perform. And there's nothing quite like a demo of that capability, particularly on a stock that's been a little battered and beaten up recently.
I mean, I can't think of a recent period where the different defense businesses got more of a global showcase of their capability than what's been happening so far this year. So understand where you're going there. Let me just also take a case study here in a company like Tesla. So our Bloomberg reporter was telling us that Tesla was under some early pressure today because you had the fresh back and forth between Donald Trump and Elon Musk as Musk announces a new political party. We also had a guest this morning who talked about trying to be familiar with the long-term ramifications of a lot of things that are happening right now, like the fiscal situation, which seems to be actually at the center of Musk's concerns with the big, beautiful bill. He's also somebody who is trying to retool a business like Tesla beyond just selling EVs, which could be impacted by the big, beautiful bill today, to become robo-taxis and to be an AI-first company. So if you're a long-term investor with a company like Tesla that moves so much all the time, what would you say to investors about that one?
If you're a super long-term investor, this is one of those stocks that you want to buy, a small percentage of the portfolio and put it in the back of the drawer on the left and not look at it for a long, long time, because the day-to-day volatility will scare you. As a day trader, that's probably a great thing. But we do see that, most of the noise in Tesla's price has very little to do with what Tesla does as a company. Tesla missed deliveries ever so slightly and went up 5%. And the recent drawdown seems to be very much related to Elon Musk's personal political beliefs and wranglings with the president. And long term, I think the Tesla investor base, the board of directors, everyone else at Tesla wants Tesla stock to go up and to produce good products. And even around here in Washington, D.C., epicenter of the big, beautiful bill, folks still own Teslas even if they put a sticker on the back that says, "I'm not for Elon," which they could have sold that car and bought a competitor. They didn't. And I think that tells you something.